Hi everybody, welcome back. This is Patrick Donahoe, and this is part 3 of our 3-part series introducing the infinite banking concept. For more information about how to apply this to your personal life, please give us a call at 800-870-8670 or email us at info@paradigmlife.net. If you'd like more information about our company as well as more resources about the infinite banking concept, go to our website as well, which has an extensive list of podcasts, which are online radio shows, as well as blog posts, videos, and so forth. So the point of this third video, and if you haven't gone back or you haven't listened to the first 2 videos, please do so before viewing this video. But the purpose of this video is to explain why we use permanent life insurance to operate the infinite banking concept. Now, there is a lot of opposition, especially on the internet, in relation to permanent life insurance, and it's mainly because individuals just don't understand, number one, how insurance has evolved over time, okay, but also how to utilize insurance properly. Most individuals that look at insurance and oppose it to a degree are focusing more on the protection side of the life insurance as opposed to the cash accumulation side. If you properly set up a policy, you'll have more protection than you ever need, as well as a huge amount of cash accumulation. One of the foremost opponents to permanent life insurance is Dave Ramsey, and I did a pretty extensive piece on his analysis of permanent life insurance that's available on our blog. So here we go. There's really 3 main reasons why I love life insurance and why I think it is an incredible opportunity for individuals to partake in. The first is what I called accumulation. Okay, so accumulation is obviously done through the cash value of a life insurance policy. Now, what really turned me on to this was the fact that corporations and banks are some of the biggest purchasers of life insurance today. Walmart has bought over 500,000 policies on its employees. Wells Fargo has tens of billions of dollars in cash value. Same with Chase and Bank of America and other large banks. They keep their liquid capital there. Now, who do they own these policies on? It's their employees. Do the employees have any part in it? Not really. Bank of America, Wells Fargo, and Chase are the owners of the policies, which allows them to utilize the cash values and then subsequently receive the death benefits upon the demise of their employees. It might sound a little morbid, but from an economic standpoint, it's a very intelligent decision. Now, the policies that banks and corporations buy are not the policies that are typically sold to the public. These policies are what are called single premium. Single premium means that one premium is made, there is a corresponding death benefit, and between 95 and 100% of that premium is available in cash value. So premium equals cash value. Now, banks typically do this through a private placement, and corporations operate it much differently as well. For an individual to buy a single premium policy, number one, they need a large amount of money, but it would also incur some negatives to the tax benefits when it comes to the accumulation of that cash value. So what we do here at Paradigm Life is we split up your premium between a level whole life policy and what's called a paid up addition. A paid up addition is exactly what a single premium policy is. And what we do is we recommend that a paid up addition is added every single year of the policy if possible until a specific year, at which time we assess the efficiency of the policy and potentially do another policy. That will require some education, so that is why we're doing these videos, so that you'll be able to meet with us and have a really good foundation on understanding the conceptual side of things. We'll get into the nitty-gritty details as you meet with us and go through our educational process. A level whole life policy is the other portion. Typically our spread is between 30 and 40% whole and 60 to 70% paid up addition. That's typically how we structure our contracts. Sometimes we do it different, just depending on the circumstances. Okay, so as we structure these policies, your cash value buildup is very, very significant. If you do a long-term analysis between 10, 15, and 20 years, you have what's called an internal rate of return of around 4 to 5 5%. That means cash on cash, you would have 4 to 5% inside of your cash value. If you'd like more information on this, go to our YouTube video entitled Buy Term and Invest the Difference. Looking at this rate of return plus the tax benefits associated with the growth, as well as the death benefit protection, as well as the guarantees, okay, as well as the lack of managerial fees, you would have to do between 9 and 10% in the market every single year for that extended period of time to meet what a policy's internal rate of return will be. That's number one, accumulation. Number two is the multi-dimensional use of the cash value. Okay? Multi-use, okay, is basically having your money accumulating inside of the policy, as I explained in the previous video, while at the same time being able to borrow against it for your purchases. Utilizing banking principles and paying yourself back interest will increase your savings rate, which accumulated the money in the first place. Okay, so as your money continues to grow with compound interest inside of your policy, you are able to use it, okay, for the different things that you would purchase, whether it's your cars, your vacations, your lawnmowers, your TVs, your computer, other electronics, down payments on real estate, money for business uses. We work with a lot of dentists and professionals that use the money to finance patient procedures. They use the money to finance sterilizer machines, or money to use for laser machines or milling machines. You can use it for whatever you want. But remember, as you're using the loan provision of the life insurance company or of the life insurance policy, your money is growing as if you never took it out in most circumstances. Okay, so the multi-dimensional use of the policy. Okay, and then third, and my most favorite, is certainty. Guarantees go a long way. Not having to worry about whether your money goes up, down, or sideways, okay, provides an economic value that is hard to quantify. Okay, the certainty that your money is guaranteed to grow, the certainty that you have companies that have been around for centuries paying out dividends on financial methodologies that have never failed. Okay, you have creditor protection. I was in a car accident earlier this year, and luckily nobody was hurt. But we never know when accidents are going to happen. Somebody falls on our yard, somebody hits us, or we hit somebody. Assets have been liquidated, and there's no reason why that should happen if you properly protect yourself. Money inside of your life insurance policy is completely protected from creditors. Okay. Now, instead of giving away the farm through these presentations, hopefully I've been able to create a foundation of why permanent life insurance has worked so well for the infinite banking concept. Okay. You have been given an opportunity to listen to something that can drastically change your financial life, your business life. And we look forward to working with you in doing so. The best part of this whole system is that the only way it could fail is if you fail to implement these principles, if you do not have the discipline. That is exciting to me, because individuals, and especially Americans, with the idea of freedom that created the foundation of our country, okay, we no longer have any freedom as to the liquidity of our retirement, the growth of our retirement, the different changes that can occur, because the 401k and 403b and 457s and Keogh plans and IRAs and Roth IRAs are all sections of the tax code, and taxes as well as other laws can change. What this allows you to do is take control over your finances. You operate your gains. You use your money, and redirecting the spending that was money that was going to go somewhere else, typically to creditors and interests, now is going to go back into your pocket. So take advantage of this. Take advantage of the technology that is out there. Take advantage of you as a human being and your human spirit and your ability to create a habit, to create a system. Please call us and let us know if we can do anything to help you. We have a 3 to 4 step process that talks about how you can start taking advantage of the infinite banking concept and how you can implement it in your own life.